going to do at the start is I'm going to give you guys a quick recap on the overall unit, or everything that's going to be on your exam as well. And we'll cover through strategies and how to approach each one, as well as some important things to consider as well. And we'll talk a little bit more about Noodle in a little bit. But yeah, I guess we'll get started right away. I'll post the attendance link as well, because there is a worksheet that I'll send to you guys as well, a different one, on top of this one. So make sure you guys do your attendance, please. So feel free to do that once. I can email you guys afterwards. But I guess we'll get started too. So as I'm sure that you guys are aware, on your exams, there will be 4 main topics that you guys will get asked on. The first one is data privacy, or the APPs. Second one is torts. Third one is partnership law, and fourth one is company law, which we will cover today as well. But I'll give you guys a quick recap on data privacy and the APPs first. So arguably, again, this probably is the easiest part of your entire exam. All you do, again, is match the facts to everything. But a quick recap on data privacy or the APPs. The main thing that you have to understand with this is that all companies have to follow a set of rules or regulations in regards to data privacy, which is called the APPs. Now, who has to follow this? All APP entities have to follow this. And how do you determine what is an APP entity? You have to apply the test outlined in section 6. The only exception for when you don't have to follow the APP is when you are a small business. So always remember that, and always remember the definition for it. So I'm pretty sure it's if your annual revenue is less than 3 million. So always remember that as well. So that's the first thing you always have to prove. Now, the second thing you have to prove is that personal information is actually being collected. So that's your name, address, that type of stuff. Sometimes they'll tell you, if you follow the definition that I've given you guys as well, personal information is your religious beliefs, name, address, etc. But there's some things that people think is personal information that isn't. So for example, that could be your credit card details. So if a company collects your credit card details, that actually isn't considered personal information. So it's really important that you guys always match the information, what's in the case study, to the actual personal information that is being collected in a way. Then you have to determine what APPs are then breached. So what is this company supposed to do that they actually didn't do? So there's 12 APPs. Follow the Australian guideline link that I gave you guys and just match the one that suits the best. There's no other way to do it. Use your best judgment to figure out which one matches the best. But if you guys do remember, I did give you guys a little bit of a shortcut. So the easiest way to sort of do it in any scenario is see what topic that it matches the best, and then look under the corresponding number and then just match it in that regard and refer to the specific APP. Of course, sometimes there are multiple as well, so always keep that in mind, but only address what you need to address and only address what you feel is relevant. Then thirdly, you check the 7 exceptions here. So again, you don't have to remember it. Simply just quickly scan through all of this and make sure that none of them really apply. I guess the most common one would be these top 3. You can release private information if it's lessening a threat to someone's life, health, or safety, taking appropriate action in suspected unlawful activity, or locate a person that has gone missing. So always keep that in mind. Even if it doesn't say anything about exceptions, just always make sure you say no exceptions apply if none of them apply. So always make sure you address this as well. And then lastly, what are the consequences for the interference of privacy? So it's like I told you guys as well, just match the one. Sometimes they'll tell you individuals, refer to section 36, and that's what they're able to do. So that, again, I feel like it's quite straightforward. And I feel like a lot of you guys have understood that topic quite well. But torts is the one that trips most students up. So do keep in mind when we talk about torts, your first question that you will get will be either on one of these 3 topics, and your second question that you get will be guaranteed on pure economic loss. But anyways, when we talk about torts, you guys always have to remember these 4 steps. 1, determine if a duty of care is owed, and how you do that is a reasonable foreseeability test, and then the broader policy test as well, and we'll talk about that in a little bit. Secondly, if you have determined that a duty of care exists, you then have to determine if there is a breach. So section 48 1A, I'll bring it up as well. So I'll give you guys this worksheet in a little bit. I'll send it to you guys after, for those that are wanting it. Oh, there we go. So section 48 1A and 1B, again, that is quite straightforward. The risk of the injury was foreseeable, and 48 1B, that the risk was significant. So say, burns, the easiest way to do it, in my opinion, if you get a risk and you know it's significant, the easiest way to prove it is by saying this risk was significant because it was not fanciful or it was not far-fetched. Because burns are a serious injury. Burns are a serious risk. So again, that's quite easy to prove. Section 48 1C is when we talk about the Wyong factors, so the negligence calculus. So make sure you understand these 4 steps really, really well. Make sure you're able to work through the worksheet that I gave you in week 9 when we covered torts. And of course, I've given you the definition of each one as well. So talk about the probability of harm, seriousness of harm, burden of taking precautions, social utility of the activity which caused the harm, and that's your Wyong factors over there. So as soon as you prove these 2 has been breached, then causation and remoteness tests. So this is your but for. And we've covered this a lot of times, so I don't think you guys struggled with that too much. So then we'll move on. And then, are there any defenses that we can argue? You guys have to match the facts to these 3 points. So again, not quite hard, right? If you're able to, once you get to each step, just refer to your next set of notes to see if any matches. So again, not too bad so far. Arguably, the most difficult part would be these 2 steps. This step really depends on how you interpret the case study, but this test, you always have to apply the right category of test. So this, I think, would be the hardest part for most of you guys. So we'll quickly discuss the test that you have to apply to determine if a duty of care is owed. Reasonable foreseeability, none of you guys should struggle with that. It is in the name, and we've said it a lot as well. So if something's reasonably foreseeable, then of course, you have a duty of care to prevent it from happening. Duty of care to warn, to say if there was an oven, is it reasonably foreseeable that this oven could explode if it's not manufactured properly? So of course the answer to that would be yes. So use your common sense to determine this one. Not too difficult. There's no other rules besides using your common sense. Now the broader test that we have to apply, most of you guys aren't quite familiar with this. So there's 5 categories that we always have to look at to determine the broader policy test, and we'll go through each one. So if you guys have a question of physical harm, which most likely I think you guys will, the test that you have to apply is the neighbour test derived from Donahue v. Stevenson. So always make sure you name drop these 2 bolded things that I've just highlighted there for you guys. Name drop these 2. But the test that you have to apply there is essentially, is there a relationship between the plaintiff and the defendant enough for the defendant to ensure that they must protect the plaintiff? So if you talk about the example between manufacturer versus, for example, bar owner versus customer, what you would do to prove it is that you would say there is a relationship that exists between the bar owner and the customer, because anything the bar owner does, for example, pour my drink, anything, make sure the drink is not expired, it would directly affect the customer. So therefore, it would satisfy the neighbor test, and therefore a relationship exists between bartender and customer. So really, really easy to prove. It's almost asking you, is there sort of a pre-established category of duty of care? Does it sort of make sense for this person to look after this person? That's what the neighbor test is. Mental harm, not as common, but doesn't mean that you can't get asked on it. The test that you have to apply is Annetts v. Australia Station. Now, there's 2 things that you have to address here. The first one is either the plaintiff witnessed the victim being injured or killed, or, this is really important, or they were in a close relationship. So what that insinuates is if they were in a close relationship, they do not have to witness the victim being killed. And I pops this as a side note for you here. So you don't have to witness someone being killed in order to prove the first test there. But arguably the most important thing that you have to find out is similar to the reasonable foreseeability test, but was the mental harm reasonably foreseeable of a person of normal fortitude? So I cannot stress this enough. This phrase is so important. So make sure you name drop this phrase. So I highlighted it for a reason. Make sure you just copy and paste this phrase. So prove that the mental harm was reasonably foreseeable of a person of normal fortitude. So if my brother dies, is it reasonably foreseeable for me to get sad and to get a mental illness from it? So the answer there is yes. But is it reasonably foreseeable for, for my grandfather that I haven't seen in 50 years for me to get really, really sad and upset about this? Ask yourself the question, is this reasonably foreseeable of a person of normal fortitude? So there, it's up to interpretation, but the test that you have to apply is this. So make sure you name drop that. And just be aware that you don't have to witness a traumatic event to develop a mental injury. And this is the case that you refer to in the test. Now, the third part, or the third potential question that you can get for the first part of tort is omission. So doing something that you forgot to do, something that you should have done. So in other words, a doctor forgetting to inform the defendant of all, doctor forgetting to inform the patient of all the potential risks that could occur in regards to surgery. So that's what omissions is. So if there is a positive duty to act, we must do it. So in other words, the doctor must inform the patient of every single possible risk there is. If the doctor should have done something, they should have done it. And if they didn't, then we categorize it under omissions. Now, in order to prove a duty of care exists in regards to omissions, we apply the duty to warn test established from Rogers v. Whittakers. And this test, you have to ask yourself this question. A reasonable person in the patient's position, if warned of the risk, would be likely to attach significance to it. So, for example, if the doctor warned me that I could die from getting this surgery, would I sort of have to contemplate the risk a little bit? Would I understand that this is a significant risk? If so, whether or not I do it, that's up to me. But if they have warned me about it, then they have already acted in the best duty of care. That would mean they didn't violate it. So if the duty of care didn't exist, it would be because the doctor didn't warn me of something that they should have warned me. They should have warned me that I could die if I got this surgery. But if they didn't warn me, then a duty of care would exist. So a lot of you guys are asking for the revision worksheet, and I'll send it after as well. So hang on a little bit, you guys. So that's the first part of it. So again, really simple. Each test, make sure you follow this table to a T. I've popped it up here. Before, when you answer any question, you don't have to be correct in order to get full marks. You just have to make it make sense. You have to address every single legal concept. So what are the legal concepts? Every single step are provided for you guys. So just make sure your analysis matches the case study as well, and you'll easily get full marks for it. But again, I don't think it's too hard so far. Does anyone have any questions regarding the first part of torts or data privacy so far? Or can you guys give me a thumbs up if you're happy to continue as well? So beautiful. So it does look like a lot of you guys are getting it, which is quite good. So can you go over fortitude again? So of course. So when it's in relation to mental harm, this test here, really, really easy to prove. You will be able to find out from the case study. They were in a close relationship because they're mother and son, for example. But when you prove mental harm was reasonably foreseeable of a person of normal fortitude, that essentially means a reasonable person of normal fortitude means they don't have any mental illness. They're just a regular person. They're not influenced by any sort of mental impact. So they currently don't have depression. They currently don't have anxiety, which would influence a person's decision normally. So when we say this, we ask ourselves the question, would a normal person develop a mental illness because of this event? So in other words, is it reasonable for this person to develop depression or sadness if their son died? So the answer to that would be yes. But then if you ask yourself the question, would it be reasonable for a friend to develop depression, anxiety of someone that they just met in second grade and never spoken to? The answer to that would be no, because a reasonable person, if you've only met someone for 1 minute, then it would, when you answer the question, would a reasonable person get a mental injury from this? The answer to that would be no. If you've met someone for a minute, you don't have an established relationship to them. That's why you have to prove these 2 points as well. So in other words, it's sort of asking you, is the mental harm reasonably foreseeable? But what you have to prove is this phrase there. Does that make sense as well? Yeah, beautiful. So now we'll move on to pure economic loss. So it's guaranteed that you will get at least one question on these 3 topics. And then it's also guaranteed that you'll get a question either on statements or either due to actions as well. So when we talk about statements, I hope you guys are 100% confident with this now. Determine if it's second or third party and apply the appropriate test. We've spent so much time looking at it. If you don't get it, please look at the worksheet, but that's just too much, so we can't cover it for today. But that's really important. If it's due to statements, apply second or third party test that I've given you guys. And if it's due to actions, apply the pair be upon criteria as well, where you weigh these 5 points. These 5 points, not hard to prove. You just have to match it from the case study. So again, the answer to all of these don't have to be yes. You have to weigh them. The majority, or most of them, have to suggest that it was too significant, therefore a special relationship exists, and therefore a duty of care is owed to each other. So pure economic loss, because we've covered it so much, we won't touch on it too much for today. But again, if you guys are confused, simply just refer to this, this test that I've given you guys there. Just refer to this table, and if it satisfies yes, then your answer will be yes as well. Then a duty of care is owed, but that's how you prove it when it comes to pure economic loss. So again, not too difficult, but now we'll move on to partnership as well. So we covered partnerships last week, so it should be in your brain, but I'll give you guys a quick rundown. So there's 4 possible topics that they can ask you on. The first one, does a partnership exist? Prove it using section 5, carrying on a business in common due to earn profit. Of course, refer to some cases as well. And like I told you guys last week, always check the exceptions. That's really, really important. Some of you guys didn't do that last week, but now that you guys know, always check that none of these exceptions apply. So that's how you prove it as well. If they are not in a partnership, it's because of the exceptions outlined. So just make sure, the easiest way to do it is that if it doesn't satisfy this criteria, then the next thing that you do is look at section 6 to determine what exceptions would apply there. Secondly, partnership. Oh my gosh, what am I doing? Partnership duties. These are obligations that all partners must do to each other. So section 33, accountability for private profit or commission. What that essentially means is you cannot take private profit or secret commission if you're in a partnership. So therefore, you must disclose it to each other. Again, I think that's just really, really straightforward as well. Nothing much for me to explain there. But make sure you just have a table of all the duties that partners must have to each other. A quick one, 2 to 3 words of what each partnership duty actually represents or what it means. And just match the facts there. But you guys don't need me to explain that one there. Now, when we talk about liabilities or torts, a lot of you guys don't know how to separate it. Like I've told you guys, torts is when you unintentionally cause harm to someone else. You unintentionally did a civil wrong to someone else. So if you don't understand that definition, the easiest way to remember it is if someone is trying to sue us or seek for damages, we apply the torts rule. So if someone's trying to seek for damages like they are in, PowerPoint, if someone is trying to seek for damages or try to sue us, like in this example, then you apply this rule. But if they are not trying to seek for damages or, compensation for anything, then you apply the actual authority rule. So that's section 9 and section, section 9 and section 13 tests. So if you're talking about debt, or actual who should pay for this part in a partnership, should we both pay together or should one person pay for it? Then you apply section 9 and section 13, and that's when you apply the actual authority test as well. Torts, again, really not too difficult. Again, all you have to do is apply this. So if the wrongful act was occurred in the ordinary course, then all partners become liable, and the plaintiff then can sue for one partner because they can sue severally, or they can sue for multiple people. They can sue jointly. So just remember the example I gave you guys last week. Again, just simply match it to the case study. So that's the common theme. Match everything to the case study. There's not much brain power required for this unit. That's why I really liked it. Just match it to the case study. So that is data privacy, torts, and partnership act as well. All the potential questions that you can get and what you need to look at when to address each question. So if they ask you a question on partnership, does a partnership exist? Then you look at this table there, refer to your notes, and refer to some cases to elaborate on it further. So now, before we begin with company law, does anyone have any further questions or concerns? So someone asked, do we need to focus on the types of authority for partnerships as well? So what do you mean by that, Cara? So yes, you do need to know actual or apparent authority. So if they have actual authority, like I told you in this example, so for example, Kevin's actual authority is buying equipment. So if I bought equipment, that would fall under my actual authority. So then both partners would become liable for the debt. So the debt would be in the partnership's name. But for example, if Mira bought the equipment, but Mira's actual authority isn't to buy the equipment, she would then have to apply the parent authority test, which is established in section 9. Does that make sense as well? So actual authority is everything that you are entitled to do within your partnership, like I told you guys last week. In a partnership, 2 brains are better than 1. You split the workload. One person does X, the other person does Y, and you get to do everything within X. So that's your actual authority. Everything that you get to do, that's your actual authority. But if you wanted to do Y, if I wanted to do Mira's job for her, then I would need to determine if I have a parent authority, and then I would have to apply section 9. So if we have time, absolutely, we can look at the case. Someone says, if we have time, we can look at Polkinghorne v. Holland. I'll look at the case and we can summarize it together as well. But if no other questions, can I get a thumbs? Can you guys send me a text on a scale of 1 to 10 if you guys are confident with these 3 topics as well? It's really important that you guys understand all 3 quite well. If you guys are sitting at, anything above a 6, that's pretty good, because no one can be a 10 for anything at this stage because you have so much time to revise. But I hope the common theme of what you guys got from this is that there's actually not that much content or not much stuff that you need to know for commercial law. I've summarized everything in 5 pages for you guys. So make sure, in order to really understand everything, your notes shouldn't be too long. If you understand each concept, if you look at it, you should know everything right away as well. So for those that are sitting anything above a 6, that's really good. All you have to do is really finalize your final understandings of each concept, and you guys will do really well. And I promise you guys that. But if you guys are ever confused, that's when you refer to this table. So don't take this table for granted. Don't take, because I have these notes, I know everything. If you don't understand each step or why you apply each step, you won't be able to continue in your analysis. But with that being said, we will move on to company law as well, because you guys will get asked on that. So we'll get started if no one has any final questions. So when we talk about company law, of course, I'll send you guys the worksheet and the PowerPoint in a little bit, most likely over the weekend as well. But anyways, when we talk about company law, there's 2 things that you guys, in partnerships law, we ask ourselves, does a partnership exist? In company law, we don't ask that. If a company exists, it's always given. So I told you guys, if a partnership exists, it just has to follow the criteria. It doesn't work that way in a company. So in a company, to become a company, there's a lot of steps that you have to follow, but you don't actually have to do, you don't get, there's types of on So there's a or the or just company. Now, it's the Australian exchange. Public company may on the stock exchange. So a public company doesn't have to be on the stock exchange. Listening, someone might think to be company is a company because of ability and a by your friends versus they make sense, right? But we'll go through in a in bankruptcy or debt, you don't pay $1,000 for shares. You only pay $10,000. What by shares means limited by guarantee. Essentially, means it's the guarantee that the company will things why company partnership or did it. The main thing is partnerships. Of course, more profit in a company, tax less in a company as well. And as well in terms of management. To have a director of operations. But if you have a large scale company, that's what you generally do to split the workload in a company. So, for example, if we look at Monash University here, Sharon Pickering, she's almost like our CEO. So Monash, it's a non-for-profit university. So we're a public university in Australia. So what, in other words, what that means is because Monash doesn't issue shares, we are a public company. So we are limited by guarantee. So what that means is that Sharon Pickering guarantees that the company will not go into debt, will not be, will not go bankrupt, that type of stuff, based on her experience, based on her, reputation almost in a way. So in other words, if Monash does go bankrupt, the bank or the liquidators or the creditors, they cannot go after Sharon Pickering. So this is the most important concept of why a company is really important. If Monash goes bankrupt, the bank cannot go after Sharon Pickering. Because, like I told you guys, in a company, you're only limited by guarantee. So they cannot go after Sharon Pickering's assets. They cannot go after a house. They cannot go after a bank account. They cannot seize her assets. They can only seize what little Monash has left. So that's an advantage of going into a company. You are only limited by guarantee or you are limited by your shares. And that goes likewise to everyone else as well. So they cannot go after Peter Marshall. They cannot go after, Anna Securus because it isn't a company. And this differs from a partnership, like I told you guys last week. If a partnership goes bankrupt, the bank can go after one partner or they can go after multiple partners. So that's how a company versus a partnership differs. Now we'll move on from that as well. When we talk, the next important topic that we'll talk about is director duties then. So in director's duties, what they'll ask you on is essentially, we say all directors have an obligation to act in these three ways. So we say a director must act in due care and diligence. They must act in good faith and best interest, and they must avoid conflicts of interest. So what is due care plus diligence? You apply section 180 subsection 1, you apply the test for it. What is good faith plus best interest? You apply this test outlined in section 181. Avoid conflict of interest. So what that essentially means is that Sharon Pickering cannot work at Melbourne University. And what test to apply? Section 182 to 183. So what does diligence mean? I'll get out the definition for you guys as well, but I do recommend that you guys do look at your textbook and make notes on this. Give me 1 second. So when we talk about due care plus, I'll pop out the section. Sorry guys, so give me 1 second. I'll pop out the section as well. Let me see if I can find it. So when we say due care or diligence, a director or other officer of a corporation must exercise the reasonable powers and discharge the duties with the degree of care and diligence that a reasonable person would exercise if they were A, a director, or B, occupied in the office. So essentially what that essentially means is that if you are a director or if you are someone that holds power in a company, so for example, that's Sharon Pickering, Peter Marshall, Anna Securities, or anyone listed below here, anyone that is a part of this company chain, so not a regular employee that, you know, is contracted to work for or report to, you know, Peter Marshall. So any director, so if you have the title director, you essentially look after a certain department there. So that's really important to note as well. So this only applies to directors or anyone that has director as a title. So when you act in due care, essentially you must look after the company to ensure that, you know, that nothing bad would happen to it. You would have to exercise everything in your power to look after a company. You wouldn't want to exploit the company. And when we talk about diligence, we essentially are asking ourselves, you're sort of asking yourself that it's sort of saying a director must be diligent. A director must be diligent enough to make sure that he doesn't do anything bad. That's essentially what it's telling you. That's what this test is sort of telling you there. But essentially, what test that you have to apply is, sorry guys, give me 1 second, is you would have to apply the reasonable person test. So I'll give you guys a quick example as well. So if a director didn't act in due care plus diligence, so we would say a director let me look at an example for you guys. So for example, if a director, so if we look at this example, if we look at Peter Marshall, or no, if we look at Anna, she's the financial officer and our senior vice president. So she would do all the, you know, all the accounting, all the, you know, statement of accounts for Monash. So she would provide a summary of all Monash's, you know, asset summary, how much revenue, how much debt Monash currently owes. But say, for example, what would happen if Anna actually underestimated how much debt Monash actually owed? So say she actually provided the wrong information. So say she provided, Monash is $10 million in debt, but she actually says Monash is only $1 million in debt right now. And then Sharon Pickering goes, hey, we're actually not much in debt. Let's, you know, invest another $20 million in overseas or international marketing. It would then beg the question, did Anna act in due care plus diligence? Should Anna have acted more carefully to ensure that this didn't happen? Because Anna underestimated how much debt Monash actually owed, someone else acted or relied on this information, and now Monash is even in more debt, and as such, it's going to take Monash longer to pay it back. That type of idea there. So the test that you have to apply is the reasonable person test. So should someone in Anna's position, should they have provided the right financial information? So if it does, then it would satisfy. Then if they should have provided the right financial information, then we say they would have breached section 180, subsection 1. So that's what this means here. That a reasonable person would exercise if they were a director or officer within the company's role, within the normal circumstances there. So that's the test that you have to apply. And of course, with that being said as well, if they didn't act in due care or diligence, then they have the opportunity to argue a defense. So what is the defense? The defense, we call it the business judgment rule as well. So what is the business judgment rule? It's this. A director or other officer may be able to, if they diligence rule, they may be able to. So that essentially means is that because essentially they look at their judgment, and if they acted in the best, if they used their best judgment and they thought their judgment, acted in the best interest of the company, essentially it would satisfy the business judgment rule. But essentially the test that you have to apply is these 4 tests. A, the director made the judgment in good faith for a proper purpose. So for example, if Monash was, really highly in debt and Sharon Pickering was like, oh, no, so we'll pick on someone else. So if we look at Peter Marshall, so the operating officer who normally deals with the marketing as well. So if Monash was really highly in debt, right? And Peter was like, okay, let's, invest an extra $10 million in international marketing. We would ask ourselves the question, did Peter act in due care plus diligence? Even though Monash was highly in debt, should he have invested another $10 million overseas? So we apply this test and we would say, hey, probably not. He didn't really act. A reasonable person, if they were highly in debt, they would probably think of a way to get out of debt first rather than invest more money. So then we would say, no, he did not satisfy this criteria. But then we would look at the business judgment rule and we would look at it from the perspective of Peter. Did Peter make the judgment in good faith for a proper purpose? So we could argue that Peter made the judgment in good faith because he thought that it would, it would be really, really good for Monash to invest overseas because they would make more money back. It would get Monash out of debt, that type of stuff. They did not have a material personal interest. So what that means is, for example, if Peter had a marketing company in Malaysia and he sent $10 million to this marketing company in Malaysia, then it would not satisfy this because then he acted on personal interest. Because if he sent that $10 million to an international company in Malaysia that was his or his friends, then, then it would not satisfy this. Inform themselves about the subject matter of the judgment to the extent they reasonably believe to be appropriate. So essentially that means he did a lot of research. He thought that it was a really good move to invest overseas and rationally believed the judgment is in the best interest of the corporation. So he did this because he thought Monash would be able to get themselves out of debt. So that's essentially what that means. So you look at the case study, and the easiest way to look at it is not even look at the definition. You ask yourself, did the director or officer act in the best interest of the company? Did the duty or director act really carefully to make sure nothing bad happens to the company? And if something bad happens to the company, then they wouldn't satisfy this, but they have an opportunity to apply the business judgment rule there. So same goes here, good faith plus best interest. And you guys will notice a lot of this overlaps as well. But when it comes to good faith or best interest, a director or officer must exercise their powers and their duties just for the proper purpose. So if they did something they should have done. So if they did something that they shouldn't have done, then they didn't act in good faith or best interest of the company. But essentially, you just match what you think suits best as well. So for section 181, or section 182, yes, it has to satisfy all of these criteria. So if he acted in good faith and for a proper purpose, but he acted on personal interest, then it would fail the business judgment rule. So avoid conflict of interest, pretty self-explanatory there, but then we look at section 191, which is disclosure. So if you disclosed it and your company allowed it, then that is okay. So that's essentially it. The directors must do these three things. But if they don't do these three things, or if we say they breach section 180, breach section 181, or breach this section there, then we can look at civil or some criminal penalties there. So section 180, civil penalties. So that's getting like a fine. Civil penalties, fine or compensation. Or section 184 says you can be criminal offense if you are reckless or dishonest. And section 191, you could get a fine as well. So again, civil penalty there. So again, just match it to the one that suits best. But the easiest way to do it is read the case study, look at if the director acted in due care diligence, look at if the director acted in good faith plus interest. If most of the time, if the director didn't act in due care or diligence, then they didn't act in good faith or best interest as well. They overlap quite a bit. So of course you guys will get these slides. I'll email you guys these slides when I finish everything I needed to do for this week. So that is director duties in a snapshot. But the second thing that we will look at as well is insolvent trading. So I haven't talked about this, but you guys most likely will get a question in insolvent trading. This is a really important topic here. So what is insolvent trading? It's in the name. It's when you trade when you are insolvent. So before I continue any further, someone says, do we apply the same rules regardless of whether or not? Yes. So whether or not it is a public or private company, you always apply the same rules. So the reasoning why I told you guys this is that sometimes people don't know whether or not to apply company law or partnership law. If you guys see the name James Farouk Propriety Limited, then you right away know to apply company law. But I just gave you guys this information for context, but all companies have to follow the Corporation Act in 2001, established in 2001. All companies have to follow this, regardless whether or not they are public or private, or regardless of what their constitution says. So anyways, we'll move on. Insolvent trading. Trading, so that's when you're making business decisions when you have no money. So when your company is in debt, when your company has literally $0 in its name, but you still want to make business moves which cost money. So someone says, do we have to mention that the company is limited or propriety limited? The answer is no. It will tell you in the case study. You don't have to, you guys don't have to differentiate between aspects of a limited or propriety limited company. You guys just need to know there's two types of companies. That's all you guys need to know. You guys don't need to know anything else besides that. So now, anyways, we'll move on. Insolvent trading is in the name when you have no money. So I pops here when you're drowning in debt, but you still want to make business decisions which cost money. So again, it's really easy to tell from the case study, but essentially all you have to do is prove these three things. To prove that the company was actually in debt, so essentially it was insolvent when the debt was incurred, or when you took on more debt. Secondly, you have to prove that the director had reasonable grounds to prove that the company is insolvent or would become insolvent. So they didn't need to have actual knowledge, but they just needed to have reasonable grounds to do it. So for example, they couldn't pay their employees' wage last week because they had no money. That would be reasonable grounds. They didn't need to know, okay, we have no more money left. They don't need to know that. So reasonable grounds is okay for this part. And 3, did the directors know or suspect at the time the debt was incurred? The company is insolvent. So were the directors aware that the company literally had zero money when they decided to take on more debt? So in other words, I'll give you guys an example. Again. So say Peter, he wants to invest overseas. Monash is crippling in debt. I'm sure Monash is doing just fine. So again, Monash is $100 million in debt. Peter goes, okay, I want to spend an extra $100 million in international marketing overseas. Even though Monash is in debt, they had a board meeting that says Monash is highly in debt. Peter was present in this meeting. So we'll ask the question, was the company in debt? Was the company insolvent when the debt incurred? So yes, the company was already $100 million in debt. When the debt was incurred, were there reasonable grounds for suspecting, not actual knowledge, the company is insolvent or would become insolvent? The answer here is yes. Peter had a board meeting that told him Monash was heavily, in debt. So therefore, he had actual knowledge that the company is currently insolvent. So therefore, the director, Peter, in this case, did know and did suspect that at the time the debt was incurred, that at the time that Peter took out the extra $100 million, the company is currently already insolvent as well. So that's how you prove it. Make sure you always address these 3 points. It's quite repetitive, but just address it no matter what. Even if you repeat yourself, they want you to be able to address these 3 points. But anyways, if you trade insolvently, like I told you before, if the banking company goes bankrupt, they go after Monash. They go after Monash in its name. They don't go after Sharon's Pickering assets. But if you trade insolvently, that's when it becomes different. The director can become personally liable for the company debt. So in other words, Peter could become personally liable for the $100 million that he took out if he breached Section 558. Is there attendance link today? Yes, let me send it as well. Sorry, guys. So make sure you guys do this link in order to get the PowerPoint and the worksheet as well. So again, civil penalty, they could become personally liable for the debt. They could be charged if dishonesty was involved, so they could go to jail. That's what criminal offense means. And then how can it be recovered? A liquidator can go in and get it, or a creditor can also recover it as well. So that's how it's different. Like I told you guys before, if a company goes into bankruptcy, they don't go after the director's assets. But if you insolvently trade, then you can because of Section 588. Now, like I told you guys, there's defenses for everything as well. But the one thing that we will focus on is the safe harbor defense. Like I told you guys, if Peter had in his best interest believe that this $100 million will have a $1 billion return, he could potentially argue the safe harbor defense. So that's what it means. A director essentially can insolvently trade if they had reasonable grounds that this insolvent trading would get the company out of debt. So of course, if your company is in debt, of course you don't want to sacrifice it right away. You want to do what you can to get it out of debt to make money again. So that's why you would take out more loan. But we know that you cannot insolvently trade because it would breach Section 588G. But that's why you get to use the safe harbor defense, because you had reasonable grounds. So what reasonable grounds is, you had the advice of an accountant, you had the advice of a financial advisor, or you had the advice of Sharon Pickering, you had the advice of the entire Monash team to take out this $100 million because you would get $1 billion return on investment. You did that, and because of that, they cannot go after you, and they can only recover what little Monash has. So again, when I talk about liabilities, it's really important that if for example, if Sharon does something that someone wasn't satisfied about, they wouldn't be able to sue Sharon. For example, if I wanted to sue Sharon, because of Sharon did under Monash, it would be Kevin versus Monash University. And under Monash University, it would fall under Sharon. So that's what I mean when I say separate legal entity as well. Monash in itself is a separate legal person. So repeat the defenses. So this is the defenses there as well. So you can insolvently trade if you have reasonable grounds that your insolvent trading would get the company out of debt. So what is reasonable grounds? Advice from accountant or financial advisor, or etc. And again, liabilities for third party, exact same as for partnerships. If you're the operations officer, then of course you can spend money on marketing. But for example, if you're the financial officer, you cannot spend money on advertising there. So of course, then the financial officer would not have actual authority. And then you apply the parent authority test, which is outlined in Section 129. For this test, I would recommend following the advice of your tutor. Whatever test they tell you to apply it, because every single tutor has told me to apply a different test. The main thing that you have to apply, it is under Section 129. However, though, when I did it, I applied Section 129, subsection 3. It worked out fine for me. But I would just recommend doing what your tutor recommended you to do to determine if they had a parent authority. And then if they had a parent authority, then the company is liable. And if they didn't, then, Anna would be $100 million liable in the debt by herself. Now, that is essentially this entire unit. Now, because we don't have much time left, we won't do this question, but I'll give you guys a chance to do this question on your own. So sorry for those that attended on Tuesday's session as well. I was intending on doing some extra exam revision, but it took me a lot longer to go through the entire content than I thought. But I still hope you guys found it beneficial, or you guys picked up on something that you guys didn't on Tuesday's session. But on top of that, that is the end of this unit, if no one has any other final questions. So this is my farewell to all of you guys. So again, firstly like to say, thank you so much for attending these sessions every single Tuesdays or Thursdays. I hope you guys have found it beneficial. I hope you guys have found that it not only just beneficial, that it impacted your knowledge, positively impacted your knowledge, or found it easier for you to understand this content in some type of way. So I guess, yeah, that's been my main goal for this session. So I hope you guys genuinely have found it really helpful. So again, thank you for spending your Tuesdays and Thursdays afternoon with me every single week. On that note, for your exam revision as well, I would highly, highly recommend you guys understand these concepts. Your understanding of the concepts, it's the most important part. If you understand the concepts, you'll be able to apply each step, because you don't get marks whether or not you get it correct. You get marks on if you actually apply the legal concept. That's what commercial law is all about. So that's my biggest advice for you guys. That's something different. Make sure you understand the legal concepts and why the legal concepts actually derive from. So in a court of law, in order to prove that a duty of care exists, they would actually have to apply these two tests. So that's why you guys have to address it. So make sure you guys understand everything that we address. So that's really important. That's some of my exam revision tips for you guys. Even on that note, something I told the Tuesday class as well, if you guys are falling behind, don't stress. When I did this exam, I'm a massive procrastinator. I learned only when I needed to learn stuff. So I literally learned this content like 3-4 days before my actual exam. And I had the exam on a Monday, and on a Sunday, I literally had the Blackpink concert until 3-4 a.m. Did my exam at 9 a.m. and I promise you guys, I did really well in it. And everything I know, I've told you guys as well. But that's my biggest advice. If you guys are short on time, don't stress. You have so much time. If I can do it, so can you guys. Everything I know, I've told you guys as well. Everything you need to know, I've also told you guys. So make sure you guys understand each step, each legal concept really well. And in your analysis, make it make sense. Make sure you're really strategic with your ideas, that kind of stuff. So that's number 2, exam revision point. Number 3, I'll send you guys out a survey in a little bit when I send you guys the information for the Google Docs, everything. Please make sure you guys do the survey. Let us know how you found these sessions. Let my boss know, let Ben and Eugenia know if you guys have found these past sessions useful in contrast to your tutorial, how you found it useful so far. It would impact me really, really well, and would let them know that, I actually haven't been wasting my time and that they haven't been paying me for no reason. So that's number 3. So please do the survey. I'm begging you guys. That's the only thing I have asked from you guys so far. And in exchange for that, if you guys ever have any questions, please, please, please email me. I'm always here to support you guys. Have always been from week 1 as well. And, anything you guys need help with, I will do my best to help you guys. I won't tell you guys, if I don't know the answer to something, I'll tell you guys, ask your tutor or look at this specific subsection. But if you guys ever need help with anything, if I know it, I'll tell you guys the answer right away. So one of the skills that I picked up from this unit is if I read a, question most of the time, I'll be able to figure out what test to apply, what section to apply, and what the general answer is in my head. So in the practice questions I'll give you shortly, there won't be any sample answers. But if you guys ever want answers to anything, I'll try to collate some of my practice responses. I'll try to email it to you guys. But if you guys need answers to anything, I can always refer to you guys what section to look at and what the answer should be. And I can always look at your analysis in that regard as well. So that's number 4. So those are the 4 things that I wanted to address as well for today. And I guess I'll summarize it by saying, farewell. I have never met you guys, but I don't blame that. I have spent this entire semester studying in Malaysia. So I'm actually currently studying abroad this semester as well. So that's why all my sessions have been online. And that's why sometimes I say 3 o'clock, because we are 2 hours behind when it's in reality 6 o'clock for you guys right now. So I am quite mindful of that as well, that you guys attend quite late. So again, simply thank you and farewell. You guys will do really, really well in your assessments. You guys are much more prepared than I have been. Again, I cannot iterate this enough. Most important step is to understand why we do each step rather than just learning a bunch of random content, and to also expand on your case table as well, which I recommend collaborating and working with your friend as well. So the broader tests, besides that, I'll leave it up for questions for the final couple minutes. But someone says the broader test in the torts of law, you always have to apply the reasonable foreseeability test, and depending on the category, you have to apply the appropriate broader test there. So if it's a question regarding physical harm, then you apply the neighbor test there. If it's mental harm, then you apply that test. That's a broader policy test. I'll look at Polkinghorne v. Holland v. Whittington as well for you right now. So someone asked that before. Give me one moment. I'll see if I have it in my notes. But on that regards as well, if you guys don't have any questions, you guys are more than welcome to go. If any questions, feel free to stay around for a little bit as well. But any questions, guys, seriously email me. I'll try to get back quite fast, and I'll try my best to help you out as well. And I really mean that as well. So really, really good luck with all your assessments. Good luck with everything you have to go on for your future endeavors at Monash. I'm sure that we may have some classes together in the future. So I look forward to actually maybe meeting with you guys sometime in the future as well. But yeah, I guess for now, farewell for those that wanted to head out.
Hi,
Yeah.
can I
Good luck, everyone.
Hi, can you hear me?
What was that? Sorry?
Oh, can you hear me? Can I get the link for revision worksheets?
Yeah, absolutely. I'll make sure you do the attendance, and I'll email it out in a little bit. But give me 1 second. Someone asked about this case first. But make sure you do your attendance. If you do your attendance, I'll 100% send it out for you as well. So I've got Polkinghorne v. Whittington here, and it was in relation to torts. So let me quickly read through it. So he was a client of this. So it was in relation to pure economic loss for Polkinghorne v. Holland v. Whittington as well. But essentially, Polkinghorne was a client of a firm of 3 solicitors, which included Thomas and his son Harold. And she was receiving advice from Harold about the investment of money, which he advised her that it was low risk and low yield. And he advised her to invest in 2 companies which were actually ran by his associate. So then the issue there becomes, were the 2 innocent parties, so that's Thomas and his son Harold, actually liable for her loss? So what ended up happening was Polkinghorne invested on the companies that Thomas and his son Harold advised her to, and she ended up making a loss. And simply apply the test that I told you guys about as well. The court held that the partners were liable as well. They have a duty of care to provide accurate advice, but in this instance, they didn't, because they provided advice from a company that was actually ran by the friend, because it was low risk and actually low yield as well. But they actually told her it was it was low risk and high yield. And there were 2 really risky companies. So this would be a second party scenario. And the court actually held that the 2 partners were liable. So Thomas and her son Harold were liable for the loss. And the court held that giving advice, financial investment advice, is within the usual course of the business as well. So that's how you would prove it. So you could use this to prove if it was in the ordinary course of the business, if it was within the ordinary responsibilities as well. And because Thomas was the one that originally gave the advice, because Harold is also the partner, both partners become liable too. So that's what the case is about. Does that make sense as well? So I'll pop it in the chat. But this is an example of a second party scenario, and then you can use that to support your evidence. So Holland and Whittingham provided advice, inaccurate financial investing advice. Polkinghorne acted on their advice and therefore copped a loss. So guys, I do have somewhere I have to go. I've got a test to go to pretty soon. But because of that, I have to end the session here, unfortunately. But I'll try to see if I can maybe run a quick 30 minutes Q&A session, but I'll keep you guys updated with that. But because I have to go, au revoir. Good luck, everyone. Any questions, please email me and I will get back to you after I've done my final assessments as well. But yeah, thank you so much for your time as well. Thank you for those that have said thank you. Thank you for your time. Thank you for listening. Thank you for being a really, really good audience. And thank you. I don't know, just thank you. I'll see you guys soon. I'll miss you guys. This has been a part of my routine. Questions, email me. So a couple of you guys have asked me questions, but I am running short on time, so I gotta get out of here. But just email me if you guys have any questions. But seriously, good luck, everyone. Email me if you